You know what drives me absolutely insane? Scrolling through social media and seeing everyone seemingly crushing it financially while you're sitting there wondering if you can afford guacamole at Chipotle. Your college roommate just posted about their new Tesla, your cousins buying their second rental property, and meanwhile, you're proud of yourself for finally hitting 4 digits in your savings account, thinking you're somehow behind the curve. Here's the thing nobody wants to admit. When you look at your bank account and feel like you're falling short, you're comparing yourself to a highlight reel that's mostly fiction. The standards for doing well financially have become completely distorted by social media. According to a 2023 study, 78% of Americans are living paycheck to paycheck. 78%. That means if you have even $1,000 saved up, you're literally doing better than 3/4 of the country. But you'd never know it from Instagram, would you? The financial comparison trap is real, and it's completely warping your perspective on your own progress. We've built this insane measuring stick where, unless you're retiring at 30 with a 7-figure portfolio, you're somehow failing. That's not just unrealistic, it's statistically nonsense. The median retirement account balance for Americans in their 30s is around $12,000. If you've got 15,000, you're ahead. If you've got 5,000, you're still doing better than half the people in your age group. What I want to walk you through today are the real metrics that prove you're actually winning, even when your bank account balance makes you feel otherwise. We're going to look at 9 specific signs that show you're making genuine financial progress. And I promise you, by the end of this, you're going to realize you're doing a lot better than you think you are. Hi, I'm Matt. On this channel, I break down real financial progress that actually matters, and I help you understand that the race you think you're losing doesn't even exist. If any of that sounds helpful, go ahead and subscribe because we're going to completely reframe how you think about doing well financially. Let's start with something that sounds almost too basic to celebrate, but here it is. If you can pay all your bills on time every single month, you are ahead of the game in terms of doing well financially. Not just keeping up, actually ahead. I'm talking about your rent, your utilities, your phone bill, your car payment, all of it going out on time without you having to play financial Tetris to figure out which bill gets paid this week and which one gets pushed to next week. If that's you, take a second and actually acknowledge that, because it's a massive achievement that millions of people cannot pull off. The Consumer Financial Protection Bureau reported that in 2024, over 40% of Americans had at least one bill go to collections in the previous year. 40%. That's not just low-income households either. We're talking about people with decent jobs who simply can't keep all the plates spinning. Late fees pile up, interest charges kick in, credit scores take hits, and the whole thing becomes this cascading disaster that's incredibly hard to climb out of. When you can't pay your rent, your landlord starts the eviction process. Miss your car payment? The bank repos your vehicle, and now you can't get to work, which means you definitely can't catch up on payments. It's a vicious cycle, and if you're not in it, that's not luck. That's financial discipline, and you should be proud of that. But here's what nobody tells you about this. Being able to pay your bills isn't just about having enough income. It's about having enough control over your spending that you're not constantly bleeding money on things that don't matter. Pause for a second and think about this. How many people do you know who make more money than you but are somehow always broke? It's not about what you earn, it's about what you keep. Controlling your spending is the foundation of every financial success story. And if you can resist the urge to upgrade your lifestyle every time you get a raise, you're already doing better than most. This is real financial progress, not just earning more, but actually keeping more. In 2025, the average American has about $4,700 in credit card debt. That number was closer to $3,000 just 5 years ago. People are spending money they don't have on things they don't need, and the fact that you're not part of that statistic means you're ahead. The discipline to say no to impulse purchases, to skip the brand new car when a reliable used one works fine, to meal prep instead of door dashing every night. That's not deprivation. That's you building wealth in real time. Every dollar you don't waste is a dollar that can go towards something that actually matters. That's the real game, and if you're playing it, you're winning, whether your bank account shows 6 figures or $600. Now let's talk about investing, because this is where people really start to feel behind. You see these posts about people retiring at 35 with 2 million in index funds, and you're thinking, I've got 12,000 in my 401k. What am I even doing? Here's the reality check you need. If you're investing anything at all, you're already in the top half of Americans. According to the Federal Reserve's 2024 data, only about 34% of Americans have any money in a 401k or IRA. 34%. That means 2 out of every 3 people you pass on the street have absolutely nothing set aside for retirement. Zero. If you're contributing even $50 a month to a retirement account, you are literally ahead of 66% of the country. Let's put this in perspective. The median 401k balance for Americans in their 40s is around $75,000. That sounds low, right? But that's the median, which means half of people in their 40s have less than that. A lot of them have nothing at all. So if you're in your 30s with 15 or 20,000 invested, you're not behind. You're actually ahead of the curve for where you'll be in 10 years if you keep going. The wealthy understand something that most people miss. Investing isn't about timing the perfect market entry or picking the next Amazon stock. It's about consistency. It's about putting money in month after month, year after year, and letting compound growth do its thing. Even if you're only investing 5% of your income right now, that's a habit that's going to transform your life over the next 20 or 30 years. What percentage are you currently investing? Because if it's anything above zero, you're building wealth whether it feels like it or not. The 2022 market crash scared a lot of people out of investing. They saw their balances drop 30% and pulled everything out, locking in those losses. But if you stayed invested or kept contributing through that downturn, you've already seen those accounts recover and grow beyond where they were. That's the difference between people who build wealth and people who stay stuck. And here's something else. Even if you're just investing in your own home, that counts. Home ownership is one of the most reliable wealth building tools in America. And if you're making mortgage payments instead of rent payments, you're investing in an asset that's likely appreciating over time. The average home value in the US increased by about 37% between 2020 and 2025. If you bought during that window, you've built equity without even trying. We're about halfway through this video, and if you're still watching, it means you're serious about understanding your real financial position. 90% of viewers click away before the halfway point, so the fact that you're here tells me you're the type of person who actually follows through on financial education. That's another sign you're ahead, by the way. The willingness to learn puts you in a completely different category than people who just complain about money but never do anything to understand it better. In the next few minutes, I'm going to show you exactly how having even a small emergency fund makes you wealthier than most Americans, and why your net worth matters more than your salary. But first, let me ask you this. When was the last time you actually calculated your net worth? Because that number is going to surprise you. Let's talk about savings, because this is where the guilt really kicks in for most people. You know you should have 6 months of expenses saved up. You've heard it a million times. But you've got maybe $2,000 in your savings account, and you feel like that's basically nothing. Wrong. Having any money at all in savings puts you ahead of a shocking number of Americans. A 2024 Bankrate survey found that only 39% of Americans could cover a $1,000 emergency expense with savings. 39%. That means if your car breaks down or your laptop dies or you need an emergency root canal, most people are putting that on a credit card or borrowing money from family. If you can handle a $1,000 emergency without going into debt, you are already doing better than 61% of the country. Does that mean you're done saving? Of course not. The goal is still 3 to 6 months of expenses, and you should absolutely keep building toward that. But the point is that every $1,000 you save is a massive step forward in your financial progress, and you need to recognize that instead of beating yourself up for not being at the finish line yet. Building a fully funded emergency fund takes years for most people. It's not something that happens overnight, and it's definitely not something that happens while you're also trying to pay off debt, invest for retirement, and, live your life. The fact that you're making progress at all means you're prioritizing your future over instant gratification, and that mindset is worth more than the actual dollar amount in your account. But here's what really matters more than your savings account balance: your net worth. This is the number that actually tells you if you're building wealth or just treading water, and most people never even calculate it. Your net worth is simple. It's everything you own minus everything you owe. Your car, your home equity, your retirement accounts, your savings, minus your student loans, credit card debt, mortgage, and car loan. Here's the crazy part. A huge percentage of Americans have a negative net worth. They owe more than they own. According to data from the Federal Reserve, the median net worth for Americans under 35 is around $14,000. That includes people with six-figure jobs who are drowning in student loan debt and people who bought houses they can't afford. If your net worth is $20,000, $30,000, $50,000, you are ahead of most people in your age group. But even more important than the number itself is the direction it's moving. If your net worth is growing year after year, even if it's just $3,000 or $4,000 annually, that is a clear signal you're building wealth and doing well financially. Most people never see their net worth increase. They make more money over time, but they also spend more, borrow more, and stay stuck at zero or in the negative. Your net worth doesn't have to double every year. In fact, it probably won't, because once you start accumulating assets, your net worth becomes dependent on market performance. Stocks go up and down, real estate values fluctuate. But if you see steady growth over time, you're on the right path, and that's something to be genuinely proud of. Now, I know what you're thinking, but Matt, I have debt. How can I be ahead if I owe money? And look, I get it. Debt feels like this giant weight hanging over your head, reminding you every month that you're not where you want to be. But here's the truth that's going to shift your perspective. Having manageable debt while making consistent progress on paying it down means you're doing better than millions of people who are drowning in unmanageable debt. In 2024, total credit card debt in America crossed $1 trillion for the first time ever. $1 trillion. The average household with credit card debt is carrying over $7,000 at interest rates north of 20%. Those people aren't making financial progress. They're paying minimums and watching the balance barely move because interest is eating up most of their payment. If you have debt but you're actively paying it down, if you're making more than the minimum payment, if you've got a plan to be debt-free in 3 years or 5 years or even 10 years, you are ahead of the curve. You're not stuck, you're moving forward, and that momentum is what matters. But here's what nobody tells you about debt. Everyone on social media who looks like they have it all figured out, they probably have debt too. That friend who just bought a $40,000 SUV, there's a 90% chance they financed it. Your coworker who takes 3 vacations a year, credit cards. The Instagram influencer with the perfect apartment, either trust fund money or they're leveraged to their eyeballs. I'm not saying debt is good, it's not, but manageable debt with a clear payoff plan is part of the normal wealth building journey for most people. The key word is manageable. If your debt payments are less than 30% of your income and you're still able to save and invest, you're doing fine. You're not behind, you're just in the messy middle of building wealth, and that's exactly where you're supposed to be. Now let's talk about income, because this is the engine that powers everything else. You don't need to be making $200,000 a year to be doing well financially. You don't even need to be making 6 figures. What you need is a steady, reliable income that covers your expenses and gives you a little bit left over to save and invest. If you have a steady source of income, whether that's a salary job, freelance work, or even a combination of income streams, you have the single most important wealth-building tool there is. Your income is your leverage. It's what allows you to pay off debt faster, build your emergency fund, invest for the future, and eventually reach financial freedom. The median household income in America is around $75,000 as of 2025. If you're anywhere close to that number, you're doing well financially. If you're below it, but you're making progress in your career, learning new skills, positioning yourself for raises or promotions, you're on the right track. Income growth doesn't happen overnight, but if you're focused on increasing your earning potential over time, you're playing the long game correctly. And here's the key insight most people miss. Your income is the most controllable variable in your financial equation. You can't control the stock market. You can't control housing prices or inflation or interest rates, but you can control your skills, your career choices, your side hustles, and your ability to negotiate for higher pay. Every extra $1,000 you earn annually is another tool for building the life you actually want. Let's talk about something most people never even think about as a sign of financial success: insurance. Stay with me here because this is actually huge. If you have proper insurance coverage, health insurance, car insurance, renters or homeowners insurance, you are protecting yourself against catastrophic financial loss, and that is a form of wealth in itself. Think about what happens to people without insurance when something goes wrong. A medical emergency without health insurance can result in $50,000, $100,000, even more in bills that completely destroy someone financially. A car accident without proper coverage can leave you liable for damages you'll be paying off for years. A house fire without homeowners insurance means you lose everything and have to start over from zero. Insurance isn't exciting. It doesn't feel like progress because you're paying for something you hope you never use. But it's a sign of financial maturity and planning that separates people who are building sustainable wealth from people who are one disaster away from bankruptcy. If you're covered, you're ahead. And here's the sign that really tells you you're doing well financially. You sleep peacefully at night. Money isn't keeping you awake. You're not lying there at 2 in the morning doing mental math about which bill you can delay or wondering how you're going to make rent. When your head hits the pillow, your financial stress is manageable enough that you can actually rest. Does that mean you never worry about money? Of course not. Everyone worries about money to some extent, even billionaires. But there's a difference between productive financial concern, the kind that motivates you to keep improving, and the kind of panic that keeps you awake at night feeling like you're drowning. Financially stable people have a calm, confident approach to money because they're in control. They know their bills are paid. They know they have some buffer and savings for emergencies. They know they're making progress on their debt and investing for their future. They are protected against major disasters with insurance. That sense of control is worth more than any dollar amount in a bank account. As you keep making smart financial decisions, you'll notice the worry decreases. It doesn't disappear completely, but it shifts from panic to planning. That shift is one of the clearest signs you're winning financially, even if your bank account doesn't have as many zeros as you'd like. Here's what I need you to understand. The financial measuring stick you're using is broken. You're comparing your behind-the-scenes struggle to everyone else's highlight reel, and it's making you feel like you're losing a race that doesn't even exist. The truth is that if you can pay your bills, control your spending, invest something every month, save a little bit, make progress on your debt, earn a steady income, protect yourself with insurance, and sleep at night without financial panic, you are absolutely crushing it. The median American doesn't have all of those boxes checked. Most people are struggling with at least 3 or 4 of them. If you've got even 5 or 6 of those 9 metrics in place, you are genuinely ahead of the majority, regardless of what your bank account says right now. In 2 minutes, I'm going to tell you the one metric that matters more than all the others combined. But first, I want you to think about something. When was the last time you actually gave yourself credit for your financial progress? When did you stop and acknowledge that you're doing better than you were a year ago, 2 years ago, 5 years ago? Most people never do that. They just keep moving the goalposts, telling themselves they'll feel successful once they hit the next milestone, and then the next one, and then the next one. That's a recipe for never feeling satisfied no matter how much you achieve. Building wealth takes time. It takes patience. It takes consistency over years and sometimes decades. The people who actually make it aren't the ones who get rich quick. They're the ones who make steady progress, celebrate small wins, and refuse to quit even when it feels like they're moving too slowly. So here's the one thing that matters more than your salary, your net worth, or your savings account balance: momentum. Are you moving forward? That's it. That's the only question that really matters. If you're making more progress this year than you did last year, if you're building better habits, if you're learning and adjusting and improving, then you're winning. It doesn't matter if you're moving slowly. Slow progress is still progress, and progress is the only metric that actually predicts future wealth. The fact that there will always be someone richer than you is irrelevant. There will also always be someone poorer. Comparing yourself to others is a losing game that benefits nobody. What matters is whether you're better off today than you were yesterday, this month than last month, this year than last year. If the answer is yes, then you're actually ahead, even if your bank account disagrees. Keep going. You're doing better than you think.